Hey guys, it is Julie here with TipRanks, and today we're taking a look at monthly dividend ETFs. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. Today, we're taking a look at several ETFs that pay out dividends monthly. We got a lot of interest on a video last month that focused on monthly dividend stocks, and it was all REITs. And I wanted to look for some non-REIT options for you guys. Turns out there's not many. So what we do have are ETFs focused on dividend stocks that pay out those distributions on a monthly basis, so you can still get that regular passive income. Now, there are a variety of these types of ETFs. Now, the ones we're going to focus on today may not have the highest yields out there, but they have really attractive expense ratios and are going to come with a little bit more stability than some of those with those double-digit yields. To each their own on that preference. That's just what I'm going to focus on today. Of course, we'll be looking at these today over on the TipRanks website, so you can head there yourself if you want to follow along. And if you haven't done so already, make sure you download the TipRanks mobile app as well by using the links in the description down below. Now, let's jump right into these monthly dividend ETFs. First up, we have the Invesco S&P 500 High Dividend Low Volatility ETF. This trades under the ticker SPHD, currently priced at about $40 per share. Now, they are down nearly 7% year to date, but have seen some solid growth over the past few years. They have an expense ratio of 0.3%. As the name suggests, this ETF tracks the S&P 500 Low Volatility High Dividend Index. That index is composed of 50 securities traded on the S&P 500 that historically have provided high dividend yields and low volatility. The fund will invest at least 90% of its total assets in common stocks that comprise that index. This ETF currently has $3.36 billion in assets under management. With 51 current holdings, their top 10 make up 26% overall, and you can see some familiar names up at the top, including Altria, Verizon, AT&T, and Kinder Morgan. If we scroll down to the very bottom here, we can see a breakdown of their sectors, heavily weighted in financial and utilities, then followed by consumer goods and technology. That monthly dividend is currently 15 cents per share for a current dividend yield of 4.26%. They paid out their last on April 28th, so the next one will be coming up near the end of May. While Wall Street analysts do not give ratings specifically on ETFs, TipRanks is able to compile all of the individual ratings on the ETF's holdings to give us an overall rating. And the SPHD ETF overall comes in as a hold. There were about 45% buy ratings and 45% holds, and then about 10% sells. The average price target works out to nearly $47, which would be an upside potential of 17%. Here we can see a few of the stocks with the highest upside potential, as well as a few with potential downside. Second, we have an ETF that was launched back in 1998, making it one of the longest ETFs still standing. That is the SPDR Dow Jones Industrial Average ETF Trust. This ETF trades under the ticker DIA, currently priced at $333 per share. They are up ever so slightly year to date at 1.6% and have seen growth of 45% over the last few years. They have a very attractive expense ratio at 0.16% as well. This ETF tracks the Dow Jones Industrial Average. The Dow Jones Industrial Average is the oldest continuous barometer of the U.S. stock market with over 100 years and is the most widely quoted indicator of the U.S. stock market activity. This is composed of 30 blue-chip U.S. stocks. The ETF has nearly $28 billion in assets under management. And the top 10 holdings make up 55% of this ETF. Of course, there's a lot of recognizable names in here, including United Health Group, Goldman Sachs, Microsoft, McDonald's, Home Depot, Visa. We have Apple, we have Walmart, Chevron. The names just go on in here with massive companies. Down below, we can see the sector breakdown: 26% technology, nearly 20% in healthcare, 16% consumer goods, and 15% financial. They pay a current monthly dividend of 18 cents per share for a dividend yield of 1.96%, paid out around mid-month. Now, this dividend does vary a lot more than the others, so that yield does range. You can see the variety in dividends here over the past couple of years. Overall, the DIA ETF comes in as a moderate buy. Based on 539 ratings to their underlying holdings, we have 63% buys, 31% holds, and 5% sells. The average price target comes in at $382, which would be an upside potential of over 14%. Here we have a list of the stocks with the highest upside potential, and there's actually none with downsides. And third on our list today, we have the Wisdom Tree US High Dividend Fund. This ETF trades under the ticker DHS, currently priced just shy of $78 per share. They are down about 7.6% year to date, but have seen some solid growth of 45% over the last few years. Their expense ratio comes in at 0.38%. This tracks a fundamentally weighted index that measures the performance of high dividend-paying companies in the U.S. The index is dividend weighted annually to reflect the proportionate share of the aggregate cash dividends each component company is projected to pay in the coming year based on the most recently declared dividend and their adjusted composite risk score. That risk score is an average of 3 factors, including value, quality, and momentum. Now you're getting a lot more diversification with this one, as the ETF has 392 holdings. With $1.2 billion in assets under management, their top 10% makes up nearly 39%. We have ExxonMobil, Chevron, AbbVie, and Altria near the top, along with Pfizer, Cisco, AT&T, and other notable names as we go down, including Ford, Kraft Heinz, and many others. At the very bottom, you'll see the breakdown leaning more towards utilities at 32%, followed by financial, consumer goods, and healthcare. Their current dividend is 14 cents per share on a monthly basis for a dividend yield of 4.35% that was paid out near the end of April. Now, this is another one that the dividend varies based on the quarter that the underlying holdings are paying out, so you will see that yield increase time to time. With 2,000 analyst ratings on this ETF's holdings, overall it comes in as a hold. That breaks down to nearly 45% buy ratings, 46% holds, and about 8% sells. The average price target is nearly $94 per share, which would be an upside potential of 20%. Down below, we do have our list of the stocks with the highest upside, along with some with downside. So there we have 3 ETFs, all with some reasonable management expense ratios, paying out dividends on a monthly basis. Let me know your thoughts on these 3 ETFs in the comments down below, and what other ones you prefer. I know some of you are going to come out with those super dividend ETFs. Let me know your reasoning behind those. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just meant for information and entertainment purposes. Make sure you're always doing your own due diligence and research before making any investment decision. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.